Get another check on shares of IBM. They are moving lower on mixed Q3 results. Let's bring in Evercore ISI Senior Managing Director Amit Daryanani. Amit, it's really the consulting business here that's got my eye. You know, the mainframe cycle is what it is, but that's a business. A year and a half ago, I asked Arvind about it. He thought with the constrained labor market, it might do better. It hasn't. How much of a concern is it?
John, that I think is the biggest issue they have right now. So the software business is doing really well. Red Hat accelerated to double digit. Mainframe, to your point, it is what it is. You're getting into a refresh cycle early next year. Probably will be a good thing next year. The issue they're going to have is the consulting business has gotten incrementally worse. Again, no one expected a lot out of it. They expected 1-2% kind of growth. It's flattish. Their December quarter guide, we think, implies further revenue degradation. And so the question will be, is that really the consulting stuff that's getting worse? And then optimistically, I'll tell you, John, you could look at this and say they've been about 6 months behind Accenture, both in terms of getting into the correction and hopefully getting out of the correction. But that should imply they can perhaps start to see consulting business stabilize and ideally grow early next year.
That said, at the end of our conversation, Arvind pointed out a few years back, I think he said 2018 or so, the software business was maybe 28% of IBM's overall revenue. Now it's more like 47. Are we getting to a point where the business that is more of a growth business and that's very margin positive is going to become a much more significant part of results?
I mean, mathematically, yes, it's going to become a bigger part of the revenue and the portfolio for sure, right? What I would say, though, is, all the AI momentum that's there is really on the consulting side. And so perhaps what could drive the valuation higher for IBM is actually seeing better growth in AI, being almost a better growth in consulting, and being the enabler of AI for enterprises. I think that's where you get the better valuation from, versus the software business where, yes, they're doing well, but I don't think you'll get the same multiple as you could get if the consulting business inflects higher for them.
Given the fact, Amit, that you also cover names like Seagate, which was a big mover to the downside today, Vertiv, which was also a big mover to the downside today, what is your early sense this earnings season of data infrastructure build out, what we're seeing, what the numbers are telling us? Because they do seem to be pretty strong as this AI investment cycle continues to play out. But perhaps investors have gotten a little ahead of themselves in their excitement.
Yeah, listen, the numbers, to your point, are actually relatively good, right? Vertiv, Seagate, even IBM, I tell you, at a different price, IBM stock would have gone up on these numbers, not down. So I think fundamentals are generally speaking fine. AI investments are going up, not down. Enterprises starting to recover. All this stuff is positive. The backdrop you have, though, is all these stocks have done extremely well in the last 90 days. So it's a little bit of, did expectations get a bit ahead of reality, which is why a name like Seagate or Vertiv, for example, today has pulled back a little bit with the markets. Again, IBM is a little bit different. I think IBM will tell you software is doing well, mainframe is weak, but that's into a big refresh cycle. The focus of them has to be what happens to consulting. And, again, if you look at the Accenture playbook and you look at the $3 billion AI bookings that they have, it should imply there's an inflection here early part of 25.
Okay. So with IBM down 4.5% right now, or some of these other names having fallen, are they buys here?
IBM, I think, into a lot of catalysts that play into their favor next year, be that the HashiCorp deal that closes or the consulting recovery or the AI tailwinds. I think IBM is a very attractive asset to own, given the fact that they should be able to beat street numbers in 25 right now.